morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar going in back up from the areas we were looking at yesterday, going towards the close. Obviously, big reaction with the Fed, and most expected a bit of a dovish hike. But then again, there was some talk that it seemed a little bit hawkish, I guess, compared to what most expected. One of the things we were looking at the dollar that we noted yesterday late in the chat room, me and Joe were talking about it, was right here on the cash dollar index on the 30-minute. You see here, even though we were saying, hey, look, can it reclaim 97? And said, want to look at it in context or in perspective, because here on the 30-minute, we got a hanging man, then another hanging man, a little bit of a Greystone doji, but that's in very quiet trading here. But these two hanging mans, and since then you can see we've gone and come off 40 pips, or 40 ticks, I guess you should say, from the 97 down here to 97.60. So a little bit of a pullback as the market looks to ease back a bit. With that, we're seeing the euro come right back into focus, or come back into play. You can see we got on the exponential moving average generated a buy signal right here on the 30-minute, certainly right here with the 5-minute. But with the 30-minute, we've come right in here in this pretty key area right there. You can see a closing basis would be right there. Let's pull this up a bit. There we go. Right there, 1433. And just right then the market just may have just got past it by 1 pip. We're seeing it ease back just a bit here. As far as the Canadian dollar, it's still hanging around close to its highs. But certainly one of the big things that we were looking at yesterday, once again, also to take a look at this is I don't see the oil here. Look on here, we're pushing back down towards 46. Wow, look at this, a $45 handle. Maybe some of this one just there we go. But what we're looking at, and I thought I had on this chart, was this 47.36, and the market needed to defend that. Coming right across here. We needed to go and defend that, and obviously we fell back. We've even pushed even lower here. That's really way in here with the dollar CAD here. And just a quick overview here. And boy, look at this continued fall in the equities. Boy, that is just absolutely huge. Just relentless here at this point, and certainly taking its toll. One of the headlines we saw going and come across was, we're seeing a lot of big buying again, once again, into German bonds, as well as obviously U.S. interest rates have also gone and come off here. But look at these bonds just ripping up here. So let's go quickly onto the news that we just got in here. I haven't seen the update yet. I'm not sure why on these Eurozone producer prices here, but we do have UK retail sales coming in in the next half hour. It says sales, UK retail sales to show an extent of consumer slowdown here. So retail sales coming in the next half hour. Rate decision for the BOE is going to be at 7 a.m. Eastern time. Obviously, coming into the States, we have the usual jobless claims figures. It'll be out at 8:30 Eastern, along with Philly Fed, which came in at 1290 the last time. I expect a little bit of an improvement up to 15 on the Philly Fed index. And Canadian wholesale trade at 8:30 Eastern. So let's go and tackle the news quickly and get back into the bias chart and see where we stand after this big day yesterday. And certainly the if you look on here with the S&Ps, very disappointed. A lot of traders were thinking we were going to get a dovish hike. And I didn't think it would be dovish, at least on the actual statement. I did think there might be a little bit of a give back beyond that, but certainly wasn't enough. I think people, or maybe traders in general, thought that we'd get something even right from the get-go more dovish. And certainly the Fed and Powell made a note about that they're going to remain politically independent. And I think really Trump just made matters worse, really testing the Fed. That's the last thing you want to do. That's the one institution that really prides itself on independence. And I think by him doing that, they were just going to go and dig their hooves in, and they weren't going to appear to kowtow to him. So I think it just made things worse by him with all those comments. Yeah. So let's go and move back in here. And we'll just quickly cover over the news, just a quick recap, and then we'll go on and quickly get into the analysis. After weeks of volatility and calls by President Trump for the Federal Reserve to stop raising rates, the interest rate, the U.S. Central Bank instead did it again, stuck by a plan of withdrawing support from an economy it views as strong. Stocks and bond yields fell hard, with the Fed signaling some further gradual rate hikes and no break for the cut in its massive bond portfolio. Maybe they have already committed their policy errors, said Eric Foltz, chief strategist at 3H Asset Management. We'd be in the camp that they have already raised rates too much. And I think we're getting that from a lot of people, and to a certain extent I have to say the same thing in light of where equities are. So it just exacerbated. And if you have to think about it, if it didn't get what people thought we were going to get, you have to figure who's going to step in and say, well, you know what, I'll buy now. I'm talking about equities. Henceforth, we see this, and on top of that, you have this concern with a global slowdown being accentuated. So that even causes a further run into bonds, interest rate instruments, and also a leg down in equity. So it's like one end up feeding on top of the other. Powell did not bow to what he called softening in global growth, tighter financial link conditions, and expectations the U.S. economy will slow next year. Fresh economic forecasts showed officials at the media now see 2 more rate hikes, but another message was clear in the statement issued after the Fed policy meeting, as Fed's comment that the U.S. economy continues to perform well and no longer needs the Fed's support either through the lower than normal interest rates. In its statement, the Fed said the risks to the economy were roughly balanced, but that it would continue to monitor global and economic and financial developments. The decision to raise bond rates is likely to anger Trump, who has repeatedly attacked the Fed central bank. I think the markets were looking for the more terms of a pause, said James Cox. It's not as dovish as expected, but I do believe the Fed will ultimately back off even further as we move into the new year. That's probably going to happen, but unfortunately, it's going to be a little bit late at that point. too late at the time. When you decided to back off, probably about the time you decided to call in the fire department when the house is already burned down. So that might be a bit of an extreme, but I'm saying is I think that's how the people are going to view it now. Is by the time they slow down, there won't be a whole lot left to resuscitate. That might be a bit extreme, but I'm saying that's how the market. Sometimes good point here is where you saw the crude oil. Oh my God, that thing continues to fall. Is that when views become that negative, people just simply want out. Policy period, 3 questions about whether the Fed intended to restrict the economy with its rare policy, but gave little way. There'd be circumstances which would be appropriate for us to go past neutral. Let's go on and move on to the Canadian dollar. Canadian dollar weakened to a 1.5-year low against the greenback on Wednesday, pressured by a softer than economic domestic data. There really isn't a strong catalyst for a reversal here. Basically, in a situation where equities continue to fall under pressure, said Mazen Issa, stocks fell under after the Fed delivered its 4th hike of 2018 as expected. Canada exports many commodities, including oil, and runs a current account deficit, so its economy could be hurt if the global flow of trade or capital slows. Chances of the Bank of Canada interest rate hike in March dropped 13% to 17% before the data. Overnight swaps and the market show bets on further tightening had already been slashed after a dovish policy announcement. The loonie lost ground on Wednesday, even as the price of oil recovers somewhat from a sharp sell-off. Yeah, but we are continuing to see now oil under pressure. Australian and New Zealand dollars sideswiped by the Fed and mixed domestic data. The Australian New Zealand dollars nursed heavy losses on Thursday after the Fed sounded less dovish on future hikes. The Kiwi took an additional knock after data showed the domestic economy slowed by more than expected in the third quarter. The Aussie dollar idled at 71.12 after losing 1%, and yet local bonds extended their recent surge amid speculations the Fed's commitment to some more rate rises would depress the economic growth and inflation. New Zealand's 10-year dived to 2.40, the lowest since late 2016, and down 47 basis points. Gross domestic product grew 0.3 to the September quarter. While we may see a slight firming of the core growth in Q4, today's data are indicative of a broad slowdown in the economy. And that's the case, folks. That's what everybody's looking at, and why you're seeing equities under so much pressure is that this concern that this is just going to hate to use that word again, but exacerbate what's already expected to be a pretty good slowdown, and why we're seeing crude continue to go on and fall out of bed. The labor market remains in good shape, reflecting continued above-trend growth support and supported for business conditions. However, ample slack remains and suggests that sustained higher wages and inflation will be challenging, she said. And to the shift in the Fed, and the odds are rising that the RBA may stay on the sidelines for longer. And lastly, we'll finish up with the dollar and gold and quickly move into our bias chart. The dollar steadied in Asian trade on Thursday as the Federal Reserve stepped back from a more aggressive policy tightening path. Yet markets were surprised by the Fed's commitment to retain the core of its plan to tighten monetary policy. Despite uncertainty about global economic growth, investors had braced for the worst, but from no rate hike to dissents and a change in the risk assessment, said Kathy Lean. And while there were subtle tweaks in the statement and lower growth and inflation forecasts, these changes were not as significant as the market had hoped. Indeed, while the Fed's dot plots now signal 2 instead of 3 rate hikes, this remains unconvincing, as barely priced in one increase in reflection of the slowdown in global economic growth. There would be more circumstances in which it would be appropriate for us to go past neutral, and there would be circumstances where it would be wholly inappropriate to do so, Powell told reporters. We shared our forecasts out to 2 rather than 3 FOMC rate hikes, but emphasis that we're essentially back to data dependency if wage inflation accelerates further amid still resilient growth, and there's little to stop the FOMC from doing a 3rd hike if data warrants it, Lean wrote. China's central bank rolled out a policy tool to spur lending to small and private firms on Wednesday. The yen advanced to 12.38 on the dollar and posed for the 5th straight day. The euro was steady versus the dollar at 13.80. Well, this was a little bit earlier because the euro has moved higher. And on to gold. Gold prices edged higher on Thursday, supported by a softer dollar and weakness in the equities after the Federal Reserve delivered a less dovish outlook. There's some safe haven bonds supporting gold prices today, said Renisha Chainani, head of commodity and currency strategy. Overall, there's a risk-off sentiment in the market. Gold is sensitive to the higher rates, and because they boost the dollar, making bullion more expensive to buyers other than currencies. So let's go on and move now into the bias chart. And look at this move in the euro, folks. We're seeing this move here. And like I said, one of the things that we were looking at yesterday late in the day was these two, as I mentioned here on the 30-minute, these two hanging man. And I really wanted to see if we could really retain this 97. One of the things that they had focused at, previously when the dollar lost its shine was, hey, what about if we get a government slowdown? And no one said anything about that. Not as government slowdown, but the shutdown. But you can see here now the dollar's really starting to lose its bid. And I think we're starting to see things that turn around. I think people were thinking we're going to see a rush into the dollar towards the end of the year. I really didn't see that per se. And we're now starting to see this euro dollar really respond high. Look at this movement here with the euro. And look at the cable now also here, making its trek. So let's go and move into the bias chart. One of the things that I thought about that we could see, now this was like over a month, was that as we continue to see these rate hikes, it works works kind of an opposite way, and that's actually even before, was that generally when you see this type of protectionism, that generally works against the currency, okay? But in a twist about, this had actually been helping the dollar because it thought that the U.S. market or U.S. economy would fare better, and on top of that, we were already raising rates to start with. And that was the thinking. But at some point I thought, well, you know what, it's going to catch up. And this might be the early signs of it starting to catch up, the very early signs, because even though the Fed raised rates, okay, even though the Fed raised rates again, I think that it might be a bit of a catch up where they feel that the U.S. economy is going to have to play catch up with some of the other economies, and maybe they've already been beat up a little bit early for that. But like I said, you're certainly seeing that reflected in prices, and what was considered a not so dovish hike as people thought. Well, now look at the euro really taking off here. So let's go on and move into what we are here with the euro. And remember, we looked at the key daily. Remember, we had here from yesterday, and that was 1469, and we're fast approaching this 1469 here on the daily. So that'll be key. Look, in case we see that, we may see the market ease back just a bit. Let's go on and take a look here on the 2-hour chart. And this got some little bit of initial resistance coming in right there, 1457. And just so you might see this just ease back a bit. The key work on the daily is 1469, but we've had a pretty good little run here. And if you look at this coming across right there, market may just take a bit of a pause at this point. And let's go on and just take a quick look here with the cash dollar index. What's that? We're right here at the bottom of the zone here. So I would expect the euro to kind of probably ease back a bit, but we're into support right here on the cash dollar index. If I remember, I believe that was our support anyway for the cash dollar index. Look at that, 96.40. And we just hit 96.41. So I would expect the euro probably to ease back a bit. We are now 14.56. Looks like we just clocked it right here. Got up as high as right there, 1459, maybe 1460. For today's resistance, and I'm thinking we're seeing the early signs of this dollar starting to ease back a bit. I would go with this for resistance right on the early morning here in this European session. Um, this pullback in the dollar already from that area um, that we saw late in the day of 97, and already a pretty good pullback from what you think. Wow, that probably has some people scratching their head. Um, and this thing is really open to moving higher. And we've got some resistance here at 1480, but I'm not so sure if we just shouldn't go with which was our range from yesterday, which is 1499. We'll go with 1480. We'll go with 1480 right here, and keep a track here on the daily close of 1469. And I think we may just very well go on and get that. Well, we'll look for first blush at 1480. Got some resistance right here. The dollar may want to go and overshoot. Let me give you an example right here. We may want to go on and overshoot this 96.40 a bit. So that may open the door for us to come down here to about, maybe as low as 96.28. And that may allow that test of the 1480 here on the euro. So we're going to go with 1480. For resistance, and 1469 is key on the daily, which is not that far away. Now, as far as support, well, we've had a pretty good run up here with the euro. And once again, like I said, I thought it was important to look from a perspective which was on, trying to move this out of the way. I guess I should have just done that. That would have made a whole heck of a lot easier. See, we just passed it. You see right here, this 96.38. And really, that's what I meant to do. I was trying to look at here. See, we're seeing this past this 96.38. Look at the euro right now. Now we've made this run up here to what? 1465. So that's what I'm saying is I believe we can make that move down here to about 96.28. Now, 96.40 was our first area of support coming out of the FOMC if we played that way. Well, now I think the market is looking at it like, boy, what a disappointment. And you look on the 2-hour, we did have a medium-legged doji. But when we looked on the 30-minute, remember we saw back-to-back hanging man. So I think at this point now, we could probably go as low as 96.20, which may allow us that 1480, which we're looking at potentially here on the euro. But watch that 1469. So moving back, we look for support. It's going to come as low as 1426. Right here, 1433, and it might even have a tough time trying to come down there. But 1469 is key on the daily. We talked about that. Okay, may try and shoot up to around 1480 before this market pauses a bit. Put right there, 1433. There we go. So 1480, we're not that far away. And 1469 is very key on the daily. You probably see maybe a little bit of a push, maybe a little resistance from that area. And I am looking on here. It says the dollar slips towards a 10-day low on growth concerns. And like I said, I think that's what I'm saying. I think that eventually it was going to catch up. I think we're just now starting to see the first inkling signs, and we could finally start to see the dollar start over the next few weeks really start to pare back as these growth concerns play out. Remember, this 1469 is key on the daily. Let's go move in now to the cable. Well, key on the cable, on a closing basis is going to be 27.16 or 27.17 right here. So we're going to go and keep that as things are starting to get a little bit shaky for the dollar. We have that marked up 27.16 right here. Let's go and take a look here on the 2-hour chart for the resistance. Don't forget this 1469 is key on the daily. So made it up to 1473. So you see the market just ease back a little bit on that first blush, first run up. On the resistance coming into cable, we do have news. Let me take a look here in the next few minutes. So we may be able to get a further push here before we quiet down a bit. We've got 26.94. Let's go and put that in there for our resistance, although 27.16 is where it can potentially push to. But on this first run up, actually right there, you see this coming across here? Actually right there if they want to push it. Let's call it 27.03. 27.03. And I think really it's what I think that's going to be is where the look on the dollar is going to be more about, at least I would believe, going forward, is not so much the U.S. is going to be so weak or so bad. I think that the narrative would be that the U.S. is going to have to play catch up, or that not have to play catch up, but the market's going to play catch up as far as the valuation for the U.S. economy to play catch up to the other global economies. So where you'll see assets pared back even further and also reflected obviously in the dollar. It's amazing if you think about how strong the dollar's been, because my thought was, remember how we had a lot of people just running into U.S. equities because they just kept going higher and higher. And I was wondering, as we kept falling, that would eventually be reflecting the dollar. But the whole thought was, well, the Fed keeps raising rates, but at some point you have to figure that you're going to lose that bid from global investors. And I guess we're starting to see that as this S&P really comes in quite a bit. But I think that we still got a long ways to go, and to a certain extent of that. But I know that I think it was Steve, or no, I think it was Stelios was looking even for much lower in equities. But to me, I think, and I even surprises me some of the figures, but I think it's more about the U.S. equities playing catch up in a valuation view as to where other economies are. Anyway, enough of that. Let's go on and move into the cable as far as support. We are still pushing up a little bit higher. We're looking at 27.03. So when we're looking at for support coming in here, this has been a very good area right here. It's not even that far away. And things are starting to turn around for the dollar index, which is going to be right here, 26.53, 26.53, and that may be a little bit strong here. Really not that far away, 26.47. Hold on. Yeah, right there, 26.40. 26.40 for support today here on the bias chart. Let's move into the Aussie. Seeing the euro now at 26, not euro, what am I saying? Doggone it. 14.69 here on the euro at that same key daily close. key for this Aussie right here is 70.99. Basically, yes, 71 cents. 71 cents on the daily support. You've got it right there, 71. Let's look at on the support coming here on the 2-hour chart. Right there, 71.08. We've actually been already below that, but I'm going to go with 71.08. Right in here. See that coming across. Actually, 71.07. 71.07. And that's key daily support, 71 even. Resistance on a short-term basis is going to be right there, 71.60. Although I think this market's overdone here, but we'll go 71.60. And let's go move into the Kiwi. You're still hanging around here. We'll look for that 14.80. Boy, the Kiwi really did get smacked pretty good. So let's go and take a look at here on the daily support here. $67.10, but really comes in right there, which is just 67.27, just a hair. Right there, 67.28. And for it's going to be 67.84. And let's take a look also here. Coming right into this exponential. They come off these lows pretty well, but the dollar's already been shellacked. Unless things get turned around, and 67.91 seems a bit too far. It's going to be the 67.82 here on the Kiwi. And let's go moving now to the dollar CAD. Well, I'm surprised this isn't even higher. I still have a short from yesterday. Actually, I have the money by about 7 pips, but I'm surprised it's not even higher when you look at where crude oil is getting absolutely shellacked here. So we certainly made a good attempt to make a run up here, and if you look at it here on the 30-minute, uh, we look at the same time that the dollar was having its struggles with those two back-to-back hanging man. You can see here at the same token, we'd come here and had a medium-legged doji here on the 30-minute and a hanging man. We certainly saw this market back off, make one more run as crude started to slip, and here we saw it start to ease back again. I'm not looking for any kind of major reversal, but really just an evening up on these positions. But I'm just going to be moving around in the meantime. I would like to see the Canadian dollar be moving further, but once again, when you see crude oil so weak, it's probably going to have its own tough time. So I think we'll probably want to even out a bit, but we'll have to wait until we start to see crude start to stabilize. And certainly that's certainly not the word that you think about when you think about the crude oil market. So let's go on and move into the Canadian dollar. So we're looking at resistance. Well, resistance is going to be that same resistance we had before, and actually they made a trek towards it. Actually, not quite. We were looking for resistance here at 35.12. We did have some resistance at 34.93, but this is on the daily. Let's go move this into the 2-hour. So resistance would be that 35.12. So that's not going to change there. And that's actually daily. So I'm going to keep that in place. Support. If things were to get turned around here in the crude oil market, I don't even have my crude oil chart, not crude oil chart, but my quote coming up. I don't know where if we were to get things to start to even out, I think support, at least on the first blush, and I would use that as an opportunity to go in and exit out and then let the market reload itself until you get momentum going for you, which would be 34.34. 34.34. These markets aren't sticking around very much, and in some ways you might think this is a bit too simplistic, but here's the deal is the moves don't stick around very much. You saw the same thing when the euro turned around and we had our bias chart, well, not bias chart support, but remember the support I was looking at with the euro post FOMC right after the announcement, I was looking at 1377. And we bottomed at around, I think it was 83, I think it was, or 80, no, 80. And then we moved higher, but then we came back and tested. We went down, was like 1370 or something like that. Obviously, now we're a whole lot higher. But my point being is, and why one of the reasons I started to rely more on these exponential moving averages on the 30-minute is because the moves don't last that long. You see what I'm saying? And then the market ends up, but by the time you get to move and you're thinking, okay, now I got this thing figured out, the dollar's going a heck of a lot lower, then the dollar goes back on the bid. And then by the time you think, okay, yeah, you see, it's all about the dollar, they say yesterday, things start to turn around. And so the exponential moving averages, at least on the 30-minute, kind of give me a heads up towards that direction. And that's why, so it may seem simplistic to just look at where these levels are, but that's how the market's trading right now. We're not in trending markets. We may be now possibly at the start of a beginning of now a dollar fade, but these are not trending markets. They go up and down with very, obviously the Canadian dollar is a completely different situation, but these moves don't last very long here before they turn around and start to rotate back again. Euro's right here at this 1464, 63, so they're having a little bit of trouble with that 1469 we've talked about on the daily. So on the Canadian dollar, 34.34 for the support, 35.12 for the resistance. Let's go on and move in now to the dollar Swissy. until we see things change around. One of the things I know that it's had some, I've had my own struggles too. I mean, because it's been a pretty tough year as a trader. But you got to take what the market's willing to give you. So if the market's, you think about it this way, I'll give you an example. Here's a good example. I won't say good example, but when I mentioned this yesterday, late in the day. So here's one right here with the dollar index. One of the things that we focused on is very simplistic. I just pointed out these two hanging man here, and I said, "Hey, look, it's coming back, but I'd like to see what it can do, and can it get a I don't remember what the word was I used at the time, but can we get a sustained move above 97 with some conviction?" And look, this was fairly simple, folks, right here. These two hanging men are like, you kind of question, okay, look, a lot of people are on the wrong side of the market, or maybe they got jostled about. Let's see what this thing is made of, and you can see how quickly it gives it back. And when you look on here, we got the sell signal right here. If you look at it right here, the sell signal got generated on this bar here, which is 96. Even the worst case, 96.84, you got the sell signal generated. Look where we're at right now. So my point being is these trends don't even last very long, and you start to go in and get jostled about here. And this goes and helps. It does help, like I said, because until we get some sustained moves where you can see a real trend develop, I think you have to go with what the market gives you, and don't worry about what the longer term implications are. I mean, at the end of last week, it was the dollar sold off because there were concerns about the government slowdown. Or actually, at the beginning of the week, there were concerns about government slowdown, whereas last week there were concerns about, well, you know what, things look so terrible in Europe because these PMIs. Well, now they don't care about the PMIs. Now the euro's in the best strength it's been in a little while. So that's what I'm saying. These moves don't even last very long. Let me see, getting back here to the Swissy franc and get off my soapbox. So you see here, we're breaking past the support here on the Swissy. And we look back here, and we're looking at the 2 hour. Next key support comes in right here. Right there. Now, once again, like I said, we're getting past some key levels. I think that eventually these levels will break because I think the dollar is going to get its comeuppance. But once again, not going overboard and saying, okay, now we know where this new trend is. It may be and start for the new year, but on a short-term basis, we are taking this key area right here. I think the dollar will dip, and then we'll try and find a little bit of support. The same way we're looking for euro, 14.80, maybe it even stretch up to 14.99. You see it's struggling a little bit here with this 14.69. So we get a little bit of an overshoot, and that support comes in right there, 98.76 for the Swissy. Let's go in and move in now on the Swissy, on the resistance, keeping it straightforward and simple until we finally do get an eventual trend. Boy, this thing is really, like I said, really getting shellacked decent amount here. So on the rebound, I think people would say, you know what, maybe things are starting to change. Wow, everything was bullish for the dollar, and now we're still paring back, although right now the concern is the global growth. So we come in right there. We're looking at 99.02 for resistance. Not even that far away, but it's going to be we'll actually give it right here to this level right here on a stretch. 99.05. That's going to be the resistance. Just isn't that far away, but I think things may be in the early phases starting to try and turn around a little bit for that. Let's go here. So it's going to be 99. This other way. So let's go moving now with the dollar yen. Well, we're hugging some support and some key support right here. Let's look on the dollar yen. I think we had 11.75 yesterday. So let's take a look. Hold on. We're going to go and keep this. This is a key daily level right here also, 1175. So let's go and keep that on first blush, which we're almost there. So I know some people, I think Steve himself had taken a short here on the euro, but I think he trades it from not euro, I mean the dollar yen, trades it from a longer term perspective. But this is a key area right here, 1175. So if you're playing the dollar yen short, I would look to maybe, and we already know that the dollar index itself, let's switch onto this real quick. Remember, we're looking for this move, maybe get down here about to 96.28-ish, remember? I've already come down here now to 96, looks like about 96.32. So you pushing it for what it's worth. If you're short the dollar yen and you're trading very short term, then I would look for some support here. This is very key here on the dollar yen, 1175. And let's go on and move back in here. This is on the daily. Let me go here. Right here, we just knocked off 75. Right here, we're right there. Pretty well stretched here. We came just down to 1176. I would look if you're short and you're trading very short term. Look where it's 1174 right now. This area right here should be some good support here for the dollar yen on a very short term basis. To adjust it for today's, we'll just move just a little bit lower, 1163. So we'll call 1163 for our intraday support, but 1175 is key, folks. So let's go here. There we go. Look at the euro pushing up again, 1472. We're looking at 1480. There's our bias chart resistance. 1469 is key on the daily. Let's take a look here on resistance here in the dollar yen. Right there, 1213. 1213 for resistance. Let's look at the cash dollar index. Euro still pushing low here at 71. Here's that 96.28 we were just talking about that we could push down as low as there. Let's take a look at where we stand here. Key daily support is 96.20. I think we may have had that marked off in the bias chart before. No, we didn't. Oh, 96.21. There it is on the daily. So 96.21. As far as intraday support, we're right here. See dollar yen, 1172, just holding just below that 1174, but we're looking at that 11. We said we could possibly move down to around 96.28-ish. And there's 27, let's see here. Right there, 96.24. 96.24. So we're going to put that for support. Now, we've got 96.24, but 96.21 is a key on the daily. So 96.24. Almost there. And look at the euro. Almost at our bias chart resistance of 1480. Dollar yen at 1170. think at this point people are now going to start to fade this dollar, figuring that now the U.S. will start to, the dollar will have to come into, well, especially if they're expecting a slowdown, you're just not going to get that interest rate differential. We're going to go with 96.52 for intraday resistance. Watch this euro here at 1480, folks. Let's go move into the XAU. We're just about there, 96.27. Dollar's 1170. So holding close to that. Well, that 1175 is key, a key daily level. Let's go and move into XAU. See, gold has been looking for the handcuffs to be taken off, but then people were concerned about the way gold was pulling back. But I've been watching gold, and gold had not paired back very much throughout this move here. So it was open to moving weaker. And obviously, when the dollar strengthened, gold could have been a whole heck of a lot worse, folks. A whole heck of a lot worse. So even though it did pull back and people thought it was disappointing, look, I was following this thing, and look, it just wasn't pulling back. I mean, a couple times I scalped it short, and I was glad to get out with a $1 or $2. It just didn't want to give it up. And so we did go in and pull back here somewhat, but once again, if you figure all the people that were long at that point, we could have easily pulled back a whole heck of a lot worse. So now you're seeing this really start to really make a move now. That's on the daily here. So when we look for support here, key daily support, 1243. We'll move into the 2 hour. Support's going to come in right there at 1248. 1248. See how much lower this thing could have come? Let's go move into the resistance. Well, we have resistance at 1258. That was yesterday. That will still be the same, 1258. And look at the euro right there at the 1480. There's our bias chart resistance. And the key is 1469. Now, yesterday we did have it. It could stretch as high as 1499, but this 1480, we're under some pretty good pressure. The dollar is just holding 5 pips below that key daily support, and the dollar index just came down to 96.27, and our bias chart support here for today, we had it right here, 96.24, 96.24. We're a little bit overdone here, folks, in 1480 here on the euro, so just keep things in perspective. Dollar yen is 5 pips below some key daily support. Gold is just $1.80 away, XAU from its resistance. Let's hurry quickly move into the bonds. Wow, look at this, 146. Right there, 45.28 for resistance, 45.28. Support on the shorthand will be 45.05, but I think this market is susceptible if we S&P is under so much pressure. We'll just go right now for 45.05. Moving here with the bunds. Wow, did they run into that? Look how quickly they're kind of giving that back. Yeah, we'll go right here with the 63.24. I think the move might be a little bit overdone at this point. With support here in the bunds at 62.93. Support right now is going to come in at 10.601 on the DAX. With resistance at 10.708. And once again, these are all short-term numbers, short-term figures, just like we've got the euro right now. 1480 is our bias chart resistance. And we just got to 1481. We got to 96.26 on the cash dollar index. You can see the dollar yen, once again, just 3 pips below that key daily support of 11.75. We're pretty stretched here. Once again, I would expect the market to take a little bit of a pause until we get the New York traders to go in and come in. And there's a bias chart for today. I'll go and get this posted, and I'll see y'all in the chat room. And a little bit later on, I'm just going to catch myself a quick nap to get acclimated to this new schedule. And I'll be back in early. And thanks for joining us here on the European Crossover.